if you're thinking of skipping this video, then make sure that you're a pro, or at least you know what you're doing, right? Because if you're a complete beginner and you're about to skip this video, all I can say is all the best, because I think you'll be making quite a big mistake, right? So what's up, guys? Today I've got 5 different strategies, methods that you can trade booming crash and make you a lot of money. You can choose to use these methods individually, or you can just combine them all. But I promise you, if you stick around and watch till the end, you benefit a lot from these strategies that I'm going to be showing you. I know that it's going to be quite hard when you are starting to trade booming crash. I remember back in the day when I started trading, I usually just went for ticks. I didn't trade both ticks or spikes, right? So that's why it was so hard for me. I usually just traded ticks, right? As long as if it's crash, right? If I just see a green candle, I just enter right there and then. Right? I didn't even think about support and resistance, where the trend is. I just entered, right? As long as if I see that maybe there's 3 ticks, I'll just take an entry, just scalping, and yeah, it was quite bad. I lost a lot of money doing that, right? So, but I'm going to be showing you exactly how you can trade to make money, right? So I just want to just a word of encouragement before I jump into the method. Just want to encourage you guys to trade with the trend, right? Just don't select to trade spikes or ticks only, right? Because what that will do is it will force you to just look for, if it's crash, maybe you are going forward for ticks, it will just force you to look forward for buy setups only. You are limited, right? Not that you are only limited, right? But you don't even see that if the trend has changed, right? You just continue looking for buy setups even if the trend has changed. So that in turn will make you lose a lot of money. Just a word of encouragement, because that's what I used to do. For the strategies that I'm going to be showing you today, right? So first of all is the flags, right? So what are flags? Flags are just a continuation pattern, right? They're just a continuation patterns, right? So we've got flags or triangles. I'm just going to be summarizing all of them into one. So it's just a consolidation, right? The market moves in 3 ways, right? So they're moving up, down, right? So up, down, or it's moving sideways, right? So these are the 3 trends that we have in the market. What are flags, right? So when the market is moving, right? So this is an uptrend, right? So when the market is moving up, what we want to see is an impulsive move up, then a pullback that's in a corrective manner. We just don't want to see this flat pullback right over here, right? Though this was a better one. Pullbacks like this that are just go straight. We want to see sort of like a corrective structure like this one, pulling back but in a consolidating manner, right? That's what we want to look for, because it means that the market doesn't have momentum to push downward. So most likely we will continue going in that trend, right? And second of all, if you see this kind of pattern, right, know that after that there's what, an impulsive move that's going to go either directions, right? So whenever you see a consolidation, right, that know that after that consolidation there's going to be a good move that's coming, right? You can use your trend line or just your triangles to mark this, but your trend lines can also do, right? So you can use something like this, and when it breaks out of this triangle, you take your trade right over here when there's what. So you got what, a breakout of this what, of the triangle, breaking what, this minor resistance over here, and then when it pulls back to that minor resistance, it now becomes what, a support. You take your buy entry, right? So that's just how you trade, right? So learn to look for these corrective patterns, right? So that, as I said, the market moves in impulsive move, then corrective manner in a pullback, then another impulsive move. So if you look for these corrective patterns, know that you're going to be entering for the impulsive move, hence you will make what, more money, right? So that's just another tip that I'm showing you. And as you can see over here, but this is the flag, right? So right over here, you just draw your trend line and wait for a pullback, a breakout and a pullback, right? So right over here, the market didn't break up, it broke what, downward. So after it broke downward, as you can see, I've got a pullback. As you can see, we've got 1, 2, 3 touches, then a breakout, then a pullback, almost touching our trend line, and then we continued going downwards. As you can see over here, it went all the way down up until here. So learn to look for these corrective patterns, right? Because they've got a lot of money. I can promise you that. Exactly what I'm just talking about. So just draw your trend lines and you wait for the breakout, and if there's a pullback, yeah, then that's when you enter, right? Right over here, there's no pullback immediately, right? But later in the video, I'm going to be showing you the method that we are going to be using to enter when the pullback doesn't come to that trend line or the nearest broken support, right? So watch till the end so that you can get what the entry methods that I'm talking about. So that's it for flags and triangles. I'm not going to be going much into depth about these topics. So if you want me to go further into depth, leave a comment in the comment section down below about the specific topic that you want me to go more in depth about, because I'm going to be sharing you 5 methods, right? So you can choose the ones that you want me to go into depth. Right now, I'm just going to be sharing you, if you know, maybe you're not a complete beginner, so this method can be quite helpful for you just by watching this video only. The number 2 strategy that you're going to be be using is flip zone. I already mentioned this in this example. Right? So flip zones, right? So flip zones are just support and resistance, but broken support and resistance. So what do you know about support and resistance? Support and resistance, you've got what? Let's say we are going up. So this is what, when we've got this pullback, this over here is resistance, right? And when it gets broken to the upside, when the market pulls back to this area over here, now acts as a support, right? So that's the second entry confirmation that we're going to be looking for. When the market pulls back over here, just look for candlestick confirmation. I'm not going to be talking about candlestick confirmations in this video, but if it's a topic that you'd like, just comment and we'll address that. When the market pulls back to this broken resistance over here, now becomes a support and it continues going up, right? So as I said, I already mentioned this in this example over here. This resistance over here, when it gets broken and the market pulls back to it, it now acts as a support, right? So I'm just going to drag this line over here, and as you can see right, so this was the resistance that we were talking about. Now we created this resistance when we had a pullback, and when it gets broken, there's a pullback. You actually put back twice, forming a small W. You take your entry again when there's a candlestick confirmation. You just have to look for a candlestick confirmation, and this over here, so like a minor small pullback, a small breakout and a pullback, and you enter. And when it put back again, it didn't respect that, right? There's no candlestick confirmation over here. It just broke out completely, right? So that's another method that you can use. Let me drag this again. As you can see, it's quite helpful right over here. We've got this resistance here. When you this pullback, when there's a breakout, pull back to that resistance, it becomes a support, and you check your entries, forms a W again, put back to that area twice. So that's just how you can enter, right? So this resistance gets broken, pull back. It's quite simple, guys. You don't have to look for hard things to make money. Just look for those small things, small concepts that you ignore, that you think are useless. They can make you a lot of money, right? Because those other strategies can make you lose a lot of money, right? It's just a simple method that you can use. This over here again, as you can see, this one of the methods that I was showing you there. When you didn't have a pullback to the trend line right over here, we've got this support, small support over here. It gets broken, and when we put back over there, we had what, an impulsive move. And as you can see also over here, this pullback is in a corrective manner. As you can see, it's consolidating as it pulls back to that resistance. So this was a very good trade over here. And when the trend line gets broken, it would be quite clearer on the M5. So I don't want to shift to the M5 right now. But this corrective manner, this pullback, it can be quite visible on the 5-minute time frame or the 1-minute time frame. That's when you see the corrective manner, very corrective manner that I'm talking about. But as you can see over here, when it created a small M over here and it broke out completely, this impulsive move, you could have had it after entering pullback to that flip zone over that zone flip over here. That's what I'm talking about, right? Then for the next method that I'm going to be showing you, right? So flip zones work when the pullback doesn't reach the trend line, doesn't go back way further, right? So that's when the next method that I'm going to show you comes into play, right? So that when there's a deeper retracement, you can also get those entries, right? So this method is the Fibonacci, right? So this is the Fibonacci. You can set it up on your phone also. Right, so this is what it looks like right over here. Let me just show you how you edit this, right? So you just set your levels to level 0.7, that's level 70, the 70% OTE. OTE means optimum trade end, right? So, and then I'm going to add another level. These are the levels that we are going to be using. Then 0.79. This is what your 79% OTE. This is work magic, guys. This is actually work magic. Just take this method that I'm going to be showing you on demo before you go live, right? So that you can be able to make a lot of money, right? Then level 1, you set it to stop loss, SL, and then level 0, you set it to scaling TP. So that's your first TP. There are actually more levels to this, but I'm just going to show you these levels. And if you want me to make a video on the Fibonacci scaling TP, and if you want me to make a video that is completely dedicated to the Fibonacci and exactly how to set levels that will make you a lot of money, just leave a comment in the comment section down below, and I will do that, right? And if you don't know how to trade the Fibonacci, let me show you how you actually do it, right? So let me just delete this. When you're using the Fibonacci, what you have to do is, first of all, we have to look for a breakout, right? So as you were saying, right? So let's say we're in an uptrend, right? Go up, and then there's a pullback, then there's a breakout. So the first thing that you have to look for when you're trading the Fibonacci is to know where the last breakout was. So over here, after this breakout, wait for a pullback, because we broke out, we're going up, so we are in an uptrend. Then for the pullback, that's when you draw the Fibonacci and wait for it to come back to the levels 70, 79, 60. Then you take your entry over here, right? So let me show you in an example. Something like over here, we've got this small resistance over here. When it gets broken, this pullback, right? So we take your Fibonacci and you draw it going up. So when you draw it going up, right, as you can see right over here, when it pulls back to the levels 70, so 70, 79 is the area over here. So that's when you take your entry after the candlestick confirmation. Then as you can see, though over here we didn't have a breakout, we don't have an entry over here, right? That's just how simple you can use this. let me delete this so that I can look for another example that will make you understand much quicker, right? So right over here, this resistance gets broken. So you've got a breakout, first confirmation made, right? Then you take what your Fibonacci again and you draw it what up until over here. So right here it puts back to the level 70 OTE. Then you take what your entry also. It's actually very simple. Right over here again. Now this for what your sell setup. We broke over here, broke the support. So after the breakout, you mark from the previous high that was formed. So from this high to that low, that's when it reaches 79% OTE, you take your trade, and if it breaks above the stop loss or below the stop loss, you exit. Then the first TP is going to be right here when you said scaling TP. I didn't show the other, I didn't set up what the other levels where there are potential TP, but if you want that video, you say video Fibonacci in the comment section and I'll make that video, right? Then for the next method that we're actually going to be using, right, it works almost hand in hand with the flip zones. We're going to be inserting the moving average. So the moving average that I usually like is just the 50 moving average, 50 and 200, but the 50 we will do for this video. So 50, right? Then exponential, I'm going to be using the color black. Then click done. Right now here when using the 50 moving average, the best tip that I can give you is to use this on the 5-minute time frame. So that's where it works best for me because there are multiple entries. That's the first confirmation. There are multiple entries and more clearer entries, right, than comparing with the M1. And right over here, when you're using the M15, the 50 moving average, what do you have to look for? So firstly, just like the Fibonacci, we have to wait for a breakout, like over here. We've got a breakout, right? Now you just enter where the candlesticks are above, right? So right here, the candlesticks are above the 50 moving average. When there's a pullback to the 50 moving average, right, there's a small consolidation forming a W. You take what your entry, right? Over here, the candlesticks are below below the 50 moving average. When it pulls back over here to this 50 moving average, you take what your entry is also, right? So just waiting for the pullbacks to the 50 moving average, taking all your entries as long as if there's a candlestick confirmation, guys, right? So over here we got a breakout, pulling back in a corrective manner over here, right? It's so like consolidating, right? And you take what your entry, breakout, pull back, enter, right? It's actually very simple. Entry over here, another entry over there, right? So it's quite simple. And if you want more videos on this, comment in the comment section below, right? Then for the last method that I'm going to be showing you, I'm going to be inserting the RSI, right? So for RSI, just set up these levels that are over here. So the level 40 represents still buying, then 50 is just an equilibrium, there's no specific, right? Then 60 is still selling, right? So then for the parameters, I usually use the level, the period 21, right, or 20, either way. So right over here, you can combine this with the moving averages, like over here. As you can see, it's best to combine this with the moving averages so that it can be of much help to you, right? So over here, when you've got when the candlesticks are below we're in a downtrend, right? As you can see, right? So let me just zoom out a little bit, right? So we're in a downtrend, right? When the candlesticks pull back, right? So when the RSI pulls back to the level 60 and 10, right, like over here, it broke out our moving average, right? But when it came back to the level 60 over here, right, it didn't actually break out, right? It's so like created an M, right? So you take your entry over here, right? So your entries for sale setups, you are going to be taking them when the RSI pulls back to the level 50 or the level 60, right? That's for your sale setups, right? If the market is in a downtrend, right? And if the market is in an uptrend, you're going to be taking your entries when the market pulls back to the level 40 and the level 50, right? So let me just show you a quick example of. So right, so in an example like this one, right? So like for this example, right, we're in a downtrend, right? We broke this trend line over here. The candlesticks are below the 50 moving average, right? And the RSI, right, it pulls back to the level almost 60, right? You take your entries, right? But right over here, that's when it put back exactly to the level of 60. Let me use this pointer, right? So right over here, when you put back to level 60 over here, when you take your entry, as you can see, it went into good profit, right? So that's how you use this strategy, right? So actually this if you want this video on this topic, leave a comment in the comment section below because it's actually long. I have to explain furthermore in order for you to actually understand this, right? So but if you check my channel, I think I'll leave a link in the comment section down below in the description box, or pin a comment about the video that we talked about this, right? But you can, if you just want this video, just comment in the comment section down below, and I will be able to remember, that post what the link, right? So that's it for this video, guys. And if you like the video, if you like the content, like, subscribe, and share the content, right, to other fellow beginner traders. So